Every Monday is a new opportunity in the stock market, and seasoned investors don't start by jumping at either buying or selling whichever shares. They start by preparing because preparation is very important. That is why in this video, I want to share 10 things you need to be looking at before you jump at the new week and make any decision as to whether to buy or sell any stock. So watch the whole of this video for you to understand the things you need to be looking at within that time period when the markets close on Friday and when they are opening on Monday, so that you as an investor, you are able to capitalize on the stock market and hopefully at the end be able to make a return. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing, making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click that button for you to subscribe to my channel. And while you're still at it, drop a like on this video. Thank you for subscribing and liking this video. And by the way, guys, following multiple requests, I've made amazing learning materials for you. Down in the description there, I've attached a link which can lead you to some of my ebooks, which are going to assist you become a more savvy investor through knowledge. Among the books there is a book titled The Portfolio Handbook, which is going to assist you know how to build portfolios and also be able to ensure you're maintaining healthy portfolios. Go and check it out. Right now, it has an access price, which is affordable before the price goes up in like a month's time or so. Thank you for checking it out. Having said that, here are the 10 things which you need to be looking at before the market opens. And the first thing you need to be doing is to review the previous week's numbers and movement in the market. This is very important for you to review performance. Simply put, look at how the different stocks did perform in the market. Look at how the different sectors did perform. And most importantly, beyond just you seeing maybe price increased or decreased, try to identify or figure out what drove the changes. Because what drove the changes is going to really assist you know what is going on the specific stocks or even specific sector. And then the second thing you're supposed to do is to check major news headlines. Simply put, check if there was any major news headline relating to stocks the previous week. And this is very important because you as an adult, most likely the previous week you are very busy, maybe doing other competing activities. You didn't get time to look into details regarding news and any fundamentals out there pertaining companies, whether it is earnings, management news, dividends, you name it. All those are important nuances, which of course do affect how stocks or shares do perform in the stock market, both in the short term and the long run. That is why between the time the market closes on Friday and when it opens on Monday, you select a time. You can even block, for example, a few hours to check any major news and think about how that news is affecting the performance of different stocks. Most important, be able to delineate any news which might affect in the short term and news which might affect in the long term, because it is very important you as an investor not to react to short-term sentiments, but in case there's any fundamental which is going to affect the stock in the long term, it is important for you to note, and then you're going to use that to decide how you're going to shape your investing. And then the third thing you're supposed to do is for you to review your portfolio. Simply put, check if anything has changed in your portfolio, right? Because 1 week time frame might seem like a little amount of time, but then again, the stock market is volatile, right? So check if there's anything which has substantially changed in your portfolio. And if there is, then you're gonna know what to do next, whether to be able to attenuate anything in your portfolio or even so, just to take note and continue watching as different things in your portfolio are evolving. This is very important, guys. And even that is why, for example, I made the first ebook, which I've attached down below. That ebook, which is going to assist you have the end-to-end review on how to build a portfolio, review and ensure you are maintaining a healthy portfolio, even including checklists for you doing review. So check that handbook down below. I hope it's going to be useful to you. And then the fourth thing which you are supposed to do is to check the watch checklist. What do I mean? Out there, you most likely have a watch list, okay? You have an existing watch list of specific stocks or shares which you are interested in, right? So you being very intentional about seeing how your watch list is evolving. Maybe there are being candidates of you considering to buy for a given duration of time. So you are basically having a close eye on them as the market is continuing to evolve. So you also checking your watch list is going to really assist you know if time is ripe to maybe make a move or not. Of course, you are looking at the entire market performance, but you have those specific stocks which are of really high interest to you. So also check your watch list, okay? And then the fifth thing you are supposed to do is for you to check or review the economic calendar. What do I mean? You see what is happening to individual stocks, like for example, you looking at earnings, dividends, those are micro dynamics. Also in the market, we have macro dynamics, right? For example, data release around GDP. For example, update information around inflation, around interest rates, you name it. Those are economic calendar information, which of course also do affect the different stocks and different sectors at a stock exchange in a different way. That is why you looking at the economic calendar is going to assist you really know what is going on and if there are any macro factors which are most likely going to affect specific sectors or industries in the stock market. That information can be very useful for you as you go about investing and ensuring you are maintaining a healthy portfolio in the market. And then the sixth thing you're supposed to do is for you to confirm your investment plan. What do I mean? You having already checked or looked at all this information I've spoken about, if you had an intention to buy or to sell, based on what is happening both at micro level and macro level, you'll be at a point where you are convinced as to whether to make a move or not. That is basically you confirming your investment plan. Simply put, taking action based on what you have planned. Of course, most importantly is you to be tracking these things over multiple weeks, not just to jump and make emotional decisions. When you are making any decision, ensure it is decision which is sober. That is why you need to look at those initial things first before you execute any investment plan. And then the seventh thing which you are supposed to do is for you to review your cash position. As you are looking to make any investment decision out there, for example, buying shares or stocks, you name it, it is important to review your cash position. And I'm saying so because, as I always say in my videos, it is important for you to have cash buffer, which you can be utilizing to tap into any opportunities which are promising in the market, whether it is in the stock market or whichever other market out there. Let me give you an example. In case you only have maybe 100,000 Kenya shillings and you are planning to jump on an investment plan, basically, which is going to make you buy shares worth 100,000 Kenya shillings. Yet also in the coming 2 weeks, you need the 100,000 maybe to pay school fees. Is it a wise thing to do? Probably not. That is why it is important for you to review your cash position so that you only invest the amount of money which you should be investing. In case even you see, for example, there is amazing securities or shares in the market which you really desire to buy and you don't have the cash to buy, then it basically means you can't execute that particular position. That is why it is important for you to review your cash position before you jump at anything, because it also has an implication of you balancing your liquidity or cash buffer versus you putting down money in the stock market for the long term. And then the eighth thing which you are supposed to do, and this I really encourage you to do all the time, is for you to read company announcements. Company announcements could range from anything. For example, change in management, earnings, dividends, acquisitions, mergers, struggling when it comes to legal dynamics, you name it. All these are company announcements. And the most important thing for you as an investor, when you are reading company announcements, is to really think, how do this company announcement affect the performance of the stock in the long term? That is a very important thing for you to figure out, because Yes, you shouldn't be jumping at making decisions emotionally or jumping at short-term decisions which you might end up regretting. But then, if there's something which is bound to affect a given stock for the long term, it could be important for you to change your position, maybe go short, just to ensure you are mitigating against a given risk. The only way of you knowing that is when you are out there reading and understanding how company announcements are affecting the performance of a stock you are holding for the long term. And then the ninth thing, which I think is also very important for investors, is for you to be able to set price alerts. You shouldn't be wasting your time looking at the market, watching prices each and every hour. That is not optimal use of your time. You having understood all these fundamentals I've spoken about, and you also having invested time to look at all the things I've spoken about, the best thing you can do for yourself is to set price alerts. Simply put, let the market come to you, as opposed to you dedicating a huge chunk of your time monitoring performance of individual stocks each and every hour. That isn't the optimal use of your time. That is why when you set price alerts, you're going to be able to know exactly the signals you are looking for, whether it is an entry or even exit signal, you're going to get based on price alerts. And that way, it will assist you avoid emotional decision making where you are watching the prices each and every minute or each and every hour. And then the 10th thing, which is extremely important on this list, is for you to stay patient and think long term. Even as you are doing this on a weekly basis, remember, the market does reward those investors who stay patient. They are the ones who benefit in the long term. So an important thing you can do as an investor is for you to stay patient and think long term. Yes, you are monitoring what is happening week on week. But then again, you need to be able to delineate daily noise or weekly noise from factors which are affecting performance of stock for the long term. And if there's any which is affecting your stock for the long term, you might need to change position based on that. But don't jump and react to take positions prematurely or based on emotions just because of weekly noise. That is why as you are doing all this, at the center of it is you being patient and thinking long term. Because you know very well, through long term thinking, you'll be able to enjoy the benefit of growth, basically share price appreciation, and also you enjoying dividends. Those are the 10 things which you need to be checking all the time between the time the market closes and when the market opens on Monday before you jump at making any decision as to whether to buy or sell any stock. What do you think? I hope you've gotten a thing or two which can really assist you be able to continue advancing your investing. Cheers, guys, and look forward to catching up with you in the next videos.